Motilal Oswal Financial Services posts weak Q3 earnings on increased losses in Aspire and slowing down of capital market businesses. Let's do a three-point analysis of what does the Q3 fine print look like and what's the outlook on the company. 1. What were the reasons behind poor Q3 show? Well, the company's profit before tax collapsed by 95% year-on-year in the December quarter. Its Q3 net profit was mainly contributed from broking and asset management businesses. The capital market business, which consists of broking, retail distribution and investment banking, actually witnessed a decline in revenue and profits in Q3. In an effort to reduce its dependence on capital markets, Motilal Oswal had ventured into affordable housing finance through Aspire Home Finance. Now, the diversification decision is actually backfiring as of now, as Aspire Home Finance continues to report losses. Now, despite the capital infusions of over 800 crores, Aspire's near-term growth outlook actually appears bleak. 2. What are the big concerns right now? The broking segment is highly volatile and faces multiple challenges of declining volumes and increasing competition from low-cost brokers. Investment banking also reported loss in Q3 due to slowdown in capital markets-related activity. Growth in asset management business is slowing down due to lackluster equity market. Now, wealth management is also impacted by adverse regulations on expense ratio and high cost incurred for expansion. Profit in wealth management business also declined by 40% year-on-year. Aspire Home Finance's loss increased on high provisions and write-offs of about 180 crore rupees in Q3. Asset quality continues to deteriorate, with gross non-performing assets increasing to 8.6% in Q3. 3. What's the outlook going forward and what should investors now do? Well, all eyes are on Aspire's performance, which can make or break Motilal Oswal's fortune. With unfavorable macro factors like tight liquidity and rising competition and no identified niche in the affordable housing, we see a daunting task ahead for Aspire. After a dream run till December 2017, Motilal Oswal's stock has also corrected more than 50% from its 52-week high. The stock is currently trading at 23 times FY20 estimated earnings. Valuations don't look cheap as earnings have also come off. We don't see a quick pullback in the stock price until we see any improvement in Aspire's performance as well. That said, a big jump in FY20 profit is also possible if capital market businesses doesn't also deteriorate further and Aspire's performance also stabilizes. Now, long-term investors with appetite for some volatility can keep the stock on their radar and wait for a further correction before taking an investment call.